I was rejected by 5 banks before discovering this FHA loophole that got me approved within 72 hours. This is what Sarah from Ohio told us after using the exact strategy I'm about to reveal. Imagine waking up tomorrow in your own manufactured home when just last week you thought homeownership was impossible. This isn't fantasy, it's happening right now for thousands of Americans who discovered the power of FHA manufactured home financing. The average American believes they need a 20% down payment and perfect credit to buy a home. They're dead wrong, and that misconception is costing them thousands in wasted rent payments every single month. What if I told you that you could own a manufactured home with just 3.5% down and a credit score as low as 580? Sounds too good to be true, but the federal government has been quietly offering this program for years while most lenders push conventional loans instead. FHA manufactured home financing isn't just another mortgage option, it's a complete paradigm shift in how everyday Americans can achieve homeownership despite skyrocketing housing costs. Let's cut through the confusion right now. FHA loans are insured by the Federal Housing Administration, meaning the government backs your loan. This insurance gives lenders the confidence to approve borrowers who might otherwise be rejected. When applied to manufactured homes, this creates a perfect storm of affordability. Modern manufactured homes cost 50 to 60% less per square foot than site-built homes, while offering comparable quality and amenities. The math is shocking. A $250,000 site-built home with 20% down requires $50,000 upfront. But a $125,000 manufactured home with FHA's 3.5% down payment needs just $4,375 to start. That's the difference between saving for decades versus months. What no one tells you is that manufactured homes have completely transformed from the mobile homes of the past. Today's manufactured homes are built to strict HUD codes with energy efficiency, modern designs, and durability that rivals traditional construction. Here's where it gets interesting. FHA manufactured home loans come in 3 distinct flavors, each designed for different situations. The first covers the manufactured home and the land together. The second finances just the home when you're leasing the land. The third helps you purchase land where you'll place your already owned manufactured home. But before you rush to apply, you need to understand the critical qualification requirements. First, the manufactured home must be classified as real property, not personal property. This means it needs a permanent foundation according to HUD guidelines. Second, the home must have been built after June 15, 1976, when the HUD code went into effect. This ensures it meets basic safety and construction standards. Anything older is significantly harder to finance through any program. Third, the loan requires mortgage insurance, both an upfront premium and an annual premium. While this adds to your costs, it's what enables the lower down payment and more flexible credit requirements that make these loans accessible. Now, let's talk money. The FHA loan limits for manufactured homes vary by county, but they generally range from $294,000 to $677,000 for a single unit property. This is more than enough for most manufactured homes, even in higher cost areas. What separates success from failure in this process is working with the right lender. Not every mortgage company specializes in FHA manufactured home loans, and going with someone inexperienced can lead to delays, rejections, or missed opportunities. When comparing loan options, pay careful attention to the interest rate. FHA loans typically offer competitive rates, especially for buyers with credit scores between 580 and 680, where conventional loans would charge significant rate premiums. Another insider advantage: FHA manufactured home loans allow for a debt-to-income ratio up to 43%, sometimes higher with compensating factors. This is substantially more flexible than most conventional programs that cap at 36%. The application process requires specific documentation beyond the usual mortgage paperwork. You'll need the manufactured home's HUD certification label number, a foundation certification, and site placement plans if the home hasn't been installed yet. The appraisal process differs too. Appraisers must be specifically qualified to evaluate manufactured homes, and they'll look at comparable sales of similar manufactured homes rather than site-built properties. This ensures you get a fair valuation. Now, let's address the elephant in the room: depreciation. The myth that all manufactured homes depreciate like vehicles is demonstrably false. When placed on permanent foundations on owned land, manufactured homes often appreciate similarly to traditional homes, especially in areas with rising property values. Real data from the Federal Housing Finance Agency shows that manufactured homes on owned land appreciated an average of 3.4% annually over the past decade, compared to 3.8% for site-built homes. That's hardly the devastating depreciation many falsely claim. One critical mistake to avoid: making major financial changes during the application process. New credit accounts, large purchases, or job changes can derail your approval even after receiving preliminary qualification. What about manufactured homes in parks or communities? FHA financing is still possible but requires the park to meet certain criteria. The lease must be long-term, typically at least 3 years, and the park must have proper zoning and infrastructure. Here's a little-known secret: some states offer additional assistance programs that can be combined with FHA financing. These might include down payment assistance, reduced interest rates, or tax credits specifically for manufactured home buyers. Florida's SHIP program, for example, offers up to $10,000 in down payment assistance that can be combined with FHA loans. California Housing Finance Agency program provides similar benefits, as do programs in Texas, Michigan, and many other states. Timing is everything in today's market. Manufactured home orders typically take 3 to 6 months from order to installation, so starting the financing process early gives you leverage when negotiating with manufacturers and avoids rushed decisions. When evaluating manufactured home models, pay special attention to insulation values, roof pitch, ceiling height, and wall thickness. Higher specs in these areas correlate strongly with energy efficiency, comfort, and long-term value retention. Let's talk about interest rates. While FHA rates are generally competitive, they can vary by as much as 1% between lenders for manufactured home loans. Shopping around with at least 3 specialized lenders can save you tens of thousands over the life of your loan. Manufactured homes can be customized far more than most buyers realize. From luxury kitchens with islands to spa-like bathrooms with soaking tubs, today's manufacturers offer options that rival custom site-built homes at a fraction of the cost. The land is a critical component of your investment strategy. Unlike the home itself, land historically appreciates over time. Allocating a higher percentage of your budget to the land versus the home can optimize your long-term return on investment. The most successful buyers treat manufactured homes as a strategic step in their homeownership journey. After building equity for 3 to 5 years, many leverage that equity into a conventional loan for a site-built home while keeping the manufactured home as a rental property. When evaluating communities, look beyond the monthly lot rent. Amenities like community centers, pools, and maintenance services can provide significant value and lifestyle benefits that offset the ongoing cost. For rural buyers, combining FHA manufactured home financing with USDA rural development programs can unlock even lower rates and zero down payment options in qualifying areas. Property taxes often favor manufactured homeowners, as the assessed value is typically lower than comparable site-built homes. This can save hundreds or even thousands annually in ongoing ownership costs. Home warranty coverage becomes especially valuable for manufactured homes. While new homes come with a 1-year manufacturer warranty, extending coverage for major systems and structural elements provides peace of mind and protection against unexpected repairs. Let's talk about the elephant in the room: depreciation. While poorly maintained manufactured homes in declining areas can lose value, well-maintained homes in good locations often appreciate at rates comparable to modest site-built homes. The appreciation rate largely depends on 3 factors: land ownership versus leasing, the quality of the home itself, and the desirability of the location. Optimizing these 3 elements is the key to maximizing your investment potential. Take action now by requesting information packages from 3 manufacturers and contacting a lender specialized in FHA manufactured home loans. Having both sides of the equation working simultaneously accelerates your path to homeownership. The difference between dreaming about homeownership and achieving it often comes down to knowledge and action. The information I've shared today has transformed thousands of renters into homeowners when traditional paths seemed closed to them. The average American will waste over $250,000 in rent over a 15-year period. That same money, redirected into an FHA finance manufactured home, could build 6 figures in equity while providing stability, tax benefits, and the pride of ownership. Take the first step today. The manufactured housing industry has evolved dramatically, and FHA financing has created an unprecedented opportunity for budget-conscious buyers to transform their housing situation. The question isn't whether you can afford to buy a manufactured home with FHA financing. The real question is, can you afford not to?